Hello and welcome to Kitco Mining's Digging Deep, sponsored by Snowline Gold, with me, Paul Harris, in which we take a deeper dive into mining and exploration news. Joining me today is Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Plus. Chris, welcome back to Kitco.
Hello there.
Now, before we start, please note that Kitco Metals and Kitco Media provides news services only and do not offer tax, legal, or investment advice. The opinions expressed are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, visit kitco.com. And of course, if you like what you see, don't forget to hit that subscribe button. Chris, you've just come back from a trip to the Democratic Republic of Congo. That's a far-flung place for many people. What were you up to there?
I went on a mine trip with some investors and analysts to Alphamin's BC mine in the far north of the Congo, near the Rwandan border, which is the world's largest tin mine. And Alphamin is listed on the Toronto Stock Exchange, though many in Canada do not know this. That's its main listing. The only other place it's listed is the Johannesburg Stock Exchange. But it is the world's largest tin mine, and it has something like 6 or 7% of global production of tin. And with tin sort of being very strong in the last 2 years, the company is just like swimming in money. Decided to redistribute it by taking analysts to check out the mine. And it was definitely a case of seeing is believing. Because people imagine that the mine is besieged by rebels or something like that. Not a rebel in sight. Disappointing for those who want to be bears on Alphamin, but Alphamin's also paying a phenomenal dividend, which is I think something like an 8% yield, 8 or 10% yield at the moment. It's just sort of like the best deal in the mining sector in Canada. And of course, the dynamics for tin are great. So they're well positioned with a pretty stellar mine. The grades there are like 4%, when most tin mines something like 1% or less. So it's really quite stunning what they've achieved there, particularly because the mine is isolated. It was quite an odyssey to get back. It was 26 hours door to door from when we left the mine in the morning until when we got to and when I got home. Little planes, minibuses, bigger planes, and then bigger planes. It was a long way, but it was worth it. So it was very interesting to see, because they originally opened their first mine a few years ago and then replicated by virtually sort of cut and paste, they said. And you could see that that's what they did do. And I think despite the fact that it's been going for a fair few years now, with the pandemic and other things, hardly anyone's actually been to see the mine besides the people in the company.
Wow. Well, I imagine you'll be writing a note about that. So I look forward very much to reading that as and when that comes out. Now, other things that are really opening the eyes wide this past week, NGEx Minerals upsized a 100 million Canadian non-brokered private placement to $175 million due to strong demand, in quotes, to fund further exploration at its Lunahuasi copper project in San Juan, Argentina, and continue exploration at its Los Helados copper project just over the border in Chile's Region 2. Sister company Filo was a copper exploration investment magnet prior to being acquired by BHP and Lundy Mining over the summer, and it now seems that that baton will be passed on to NGEx, and that perhaps some of the investors that won big on Filo are recycling their gains into NGEx. Another copper raise this week was Western Metallica Resources, who plans to raise 1 million Canadian to support an upcoming drill program at its Luz Maria porphyry prospect in Peru. I think these two findings illustrate the gap between the haves and the have-nots in the copper space. Chris, is one company dominating copper exploration financing good or bad for the sector?
No, I wouldn't say that they are dominating. I mean, all you need to do is have appended to your project San Juan, Argentina. And as I've said many times in the past, San Juan is the new Chile. And the money starts to flow. There's a whole string of assets along there. McEwen Copper's Los Azules, Pampa Metals Pequeñas, El Pachon of Glencore, and Altar of Aldebaran. All these are in a string of pearls along the border with Chile, but on the Argentine side. So you don't have the meddling Chilean government in the equation. And NGEx is like a sister company, or was a sister company to Filo. So it's a bit of a case of wash and repeat, I think. And investors are looking to do the same thing again. But, if you look at it, it's really quite stunning that you have 5 of the biggest mid-tier copper projects in the world. And we've got to remember that there are hardly any top-tier copper projects undeveloped in the world anymore. So 5 of the biggest second-tier projects are all in San Juan. And they're all moving forward. So it's pretty hot stuff. And it's no wonder that much money was thrown at NGEx.
Okay. Now, a couple of weeks ago, Chris, you published a note digging deep into Argentina with 10 observations on the Milei government, Javier Milei, the president of Argentina. Chris, what were, you think, your most important observations that you put into that note?
I think the main thing is that in as far as mining is concerned, Milei and even the Kirchnerite governments beforehand were very laissez-faire. Now, I mean, you usually don't associate the word laissez-faire with Peronist governments, but they have been very soft touch. That's one of the reasons why the lithium industry in Argentina has advanced so much at Chile's expense. And now we're seeing the same thing happening in the copper space. Now the currency is stabilized. It's been essentially stable all this year. The inflation's coming down steeply. Milei has started the process of cutting back the mind-numbing bureaucracy that has stifled Argentina for a long time. And you've got all these people beating a path to Milei's door. So they're coming to see him rather than him going to see them, because Argentina is regarded as sort of like the Thatcherite heaven of Latin America, or indeed of the world these days.
Now, Chris, for mining investors, what are some of the key things that they need to watch for going forward? I think some of the things that are coming up will be a tax stability agreement for the Jose Maria deposit, which Lundin Mining has, and presumably at some point Filo or BHP and Lundin Mining will be looking to do a similar thing for the Filo del Sol deposit that they're in the process of acquiring.
Yeah. So what's happened is that Milei managed to get past something called the RIGI, which is the regime for big investments. It's basically investments of over $200 million US dollars, has a special sort of protection around investors that go into those projects and companies that are promoting them. And so I would suggest that probably the investment, the money that was being raised by NGEx was to go towards, kickstarting that. They're definitely not going to be spending $170 million on exploration. I think that they're looking to move up to the next phase and, starting to put in infrastructure, because one of the most challenging features for all of these projects in San Juan is infrastructure, because most of them are at 3,000, 4,000 meters. And then a part of the country that doesn't even have villages. It's got nothing except enormous amounts of copper. And so the companies are building in roads. I mean, I've seen that at McEwen Copper's project. So you spend a lot of money over and above the exploration dollars. But it's all part of the eventual push, because as most people realize, the copper price is probably, famous last words, not going down from here, or not going down meaningfully. So there's a rationale for all of these projects moving forward in the future. It's not like they're going to have the carpet pulled out under them like the lithium space has, for instance.
Now, Argentina's got some very big deposits that have been known for a long time, but for one reason or other haven't been able to advance. One that springs to mind is the Navidad project, which is further south in Argentina. With the Milei's Rigay regime and the desire to develop the mining sector, do you see the possibility of that project sort of thawing out and being able to move forward?
Look, the ball is entirely in the court of Pan American Silver on La Navidad. The province has a rule, this is the province of Chubut, against cyanide processing and against open pit mining in a certain zone near to the Andes Mountains because of tourism, because of nature, whatever. That's what they've decided. Now, this project's been around for a long time. It could be re-engineered as an underground mine, and Pan American Silver are holding their ground and are prepared to die in a ditch rather than get Navidad going by organizing the project as an underground mine. That's their problem. I do not regard it as a problem for Chubut. It's a problem for Chubut that Chubut's not going to be getting the royalties and it's not going to be getting the jobs. But Pan American Silver paid $600 million, I think, for this long time ago, over 10 years ago. And it's been dead money. And they will not budge. And they and many other big miners are obsessed with the easy, what was once upon a time easy option of open pit. Open pit now comes with nightmares of tailings treatment facilities, which have become the most expensive part of any mine now. And they will not rethink. So look, I'm not shedding any tears for Pan American Silver, but the project is definitely one of the biggest in the world in silver space, and the silver price is good. So Pan American are going to bury their head in the ground like an ostrich. Well, let them do so.
Okay, well, let's switch to lithium. You mentioned lithium in Argentina, how Argentina's stolen a march on Chile. But let's look at lithium in North America. Lithium Americas and General Motors entered into a new investment agreement this week to establish a joint venture to fund, develop and operate the Thacker Pass lithium deposit in Nevada. This will see GM take a 38% asset level stake in Thacker Pass. They're putting in $625 million, including $430 million of cash and a $195 million letter of credit facility as collateral to support the requirements of a $2.3 billion loan from the Department of Energy. Lithium America shares have fallen in value by 50% so far this year as the lithium price continued to grumble. Chris, this must be a huge relief for Lithium Americas to get this financing and the credit note, even though they had to give up asset level ownership.
Yeah. Not persuaded on North American lithium prospects, I've got to say. I know this is not spodumene, but really, brine trumps hard rock in lithium, I've got to say. And even more so when cost and the price of lithium come into consideration. And many projects that are on the drawing board are going to stay on the drawing board for many, many years. Now, this one appears to maybe be moving off the drawing board, but have GM actually handed over a check? Or is it a contribution to an eventual build that they're making? And if the build doesn't happen, they're contributing to something that they're not going to have to contribute to. So it remains to be seen. It remains to be seen. I'm so skeptical, alas, of the energy transition as it pertains to North America. It's sort of like, except for Canada, which is enthusiastic about it. I don't think the US actually is. The US consumer definitely isn't.
What about, Rio announced a big M&A deal a week or so ago. They've tried to get into the lithium space. There's increasing protests for their Jadar project in Serbia. So they've taken another route. They're buying somebody else. What's your view on their intent to really get into the lithium space in the big way?
Brian, they made a big bet on Argentina. It's a $6.8 billion bet on Argentina. That's the biggest bet I think that anyone's ever made on Argentina. So there you go. And the Hadar project in Serbia is not dead by any means. The Serbians have learnt their lesson, I think. And moreover, Brussels is putting the pressure on Serbia because while there are sort of like rather tin pot lithium projects in Germany and in Portugal, the Portuguese one having been blocked by NIMBYs, the Serbian project is mega. And it solves quite a lot of Europe's needs in lithium. Not all of them by any means, but it's a big solution. And of course, Serbia is up to become a member of the EU, and the pressure is on. The pressure is on.
Let's look at the sort of mineral itself. Does lithium have a path back to higher pricing levels? And perhaps more importantly for our viewers, do lithium stocks?
Well, many lithium stocks, I would say the majority, are going the way of the dodo because they're excess to requirements. Even in a country like Argentina, we've got a lot of big projects going on. The ones that aren't advanced face the risk of wilting on the vine because we do not need, despite what some consultants might say, 50 or 60 new lithium projects. We do not need that. As we can see from many of these brine projects, you can actually double up the production, quadruple the production from your same piece of llama pasture than by starting a new project or looking for another one somewhere else, because you've got your processing plant already on the side of one of these salars, and you just increase the capacity of the plant, because all you need to do to increase production from the salars is just pump up more brine.
Let's talk M&A, but not the exciting stuff that gets the juices flowing, but the fight for survival at the bottom of the pile. We're seeing a spate of nanocap juniors merging to create, well, slightly less nanocap juniors. Signa's Metals is to acquire Doré Copper Mining in a non-premium merger of equals valued at 52 million Canadian. Next Gold Mining is to acquire Signal Gold in a 79 million Canadian all-stock deal. Americas Gold and Silver consolidated the Guiana complex in a 78 million Canadian deal. QC Copper and Gold is to buy Cuprum in a 10.8 million Canadian deal. Eros Resources, Mass Gold and Rockridge Resources are entering an all-stock three-way merger with an aggregate market capitalization there of 11.5 million Canadian. And most recently, Aurum Resources is to acquire Mako Gold for 18.5 million Canadian. Chris, what does this level of consolidation say about the state of the junior sector and its access to funding?
That many of them are starving to death. But because what's happening here is it's not the worst of them that are merging. These are the ones that have still got some life in them and have got projects that someone would want to buy. There are hundreds of TSXV companies that are running out of money. They're running on thin air, smell of an oily rag, literally. And their projects are just like dead in the water. They haven't done exploration for 2 or 3 years because they haven't had any money. They've been using whatever they've got to fund the remainder of their lifestyles and keep the light bulb, warm in the office. They're not receiving anyone knocking on their door because their assets are worth a damn, even in the best of circumstances. So, it's very difficult to raise exploration dollars at the moment. So if you're an explorer and you see a really attractive, well, in your perception, an attractive exploration project next door, do you really want to double up, dilute your shareholders when you can't raise enough money to explore your own patch of moose pasture? Do you really want to? And so these deals that are being done because there's some merit in both sides. When there's no merit in one of the other sides, that product is remaining on the shelf or being tossed out with the trash, because there are way too many companies with way too puny projects for for this market. No one's really interested. I don't see why people should be. I mean, why should we be funding exploration of really, not third-tier assets, but like sixth-tier assets? They're really just not worth getting out of bed in the morning for.
Now, Chris, how many more companies do you think need to go for there to be a healthy exploration and development sector, and one that it is possible to finance?
Ooh, at the TSXV or 300?
Okay.
We're doing a mass die-off here where it's Darwinian.
An extinction event.
Yeah, but the trouble is that they all then become shells and they get recycled again, in the next fad. There's life after death in the TSXV.
Definitely. Chris, it does seem counterintuitive, though, that gold price at record highs, it's crossed over $2,700 today. The gold price at historical highs, copper price at near historical highs, but companies find it really difficult, if not impossible, to raise funds. Why do you think that is? Why aren't investors focused on exploration? Are they sort of into harvest mode, looking at the producers and the bigger companies?
They're looking at the producers, because the only person who can get the 2,700 per ounce is someone who can produce an ounce. If you're not producing an ounce, but you are producing a 43-101 that's this thick, you can't get $2,700 for it.
Okay, well, let's end on a high note. One company flying high is Mexican gold producer Orla Mining, which this week repaid the last $58.4 million balance on its revolving credit facility, and it is now debt-free. It is one of the lowest cost producers out there, with one of the biggest all-in sustaining cost margins. And so with the debt paid off, it's really going into ATM mode. Chris, with the gold price bonanza, would you like to see more producers paying down their debt?
I'm not sure that a lot of producers have that much debt. They've tended to eschew debt in any case, because debt has been sort of like pretty fatal for many in the past, even producers. One slip and you're gone, and some predatory hedge fund has grabbed you and drags you under like a shark. I don't think that most of the producers have an enormous amount of debt. They manage it quite well. If they've survived long enough to become a producer, they probably have got a clue. But we've seen producers go bust too. Ones who fly too close to the wind or try and do a project with too little money. But I think if anything, it just goes to show Mexico is not as bad as people paint it. And I think some propagators or proponents of projects outside Mexico have had a field day of slagging off Mexico because of this supposed open pit ban. I think it's much ado about nothing, and an open pit ban could be a good thing in many more places.
Now, you mentioned earlier about the dividend yield of Alphamin. With the gold companies, the gold producers set to produce some really, really good profits. We're about to report third quarter results. Most people expect margins to go up, cash flow to go up, et cetera, et cetera. How would you like to see gold companies potentially adjust their capital allocation strategies in light of this gold bonanza? Do you want them to look at growth, returns to shareholder, something else?
Dividends. But of course, the Canadian C-suites have the retail investors particularly bamboozled with the idea you don't want dividends. You don't really want a dividend, do you? This is much better if it's paid to us as compensation than you getting a dividend. And we'll do a normal course issuer bid, which of course you can't participate in because you'll have a capital gains obligation. So that'll just be to prop up our option prices so that we can make more money, personally. But, retail investors in Canada have got to wake up and realize that they're being bamboozled by executives who are basically feathering their own nests in the good years, and in the bad years, they're coming around rattling their cup, complaining that they need more financing. So it's feast or famine. But most of the famine is for the investors and the feast is for the executives.
Well, let's follow that theme a little bit more. One company looking to return capital to shareholders is O3 Mining, which this week announced it got approval to implement a normal course issuer bid, an NCIB, to buy back up to 8.3 million shares. At current prices, that represents about $8 million of capital to do so. Now, O3 Mining is a non-cash flowing exploration company. Chris, should non-cash flowing explorers engage in buybacks?
It sounds like madness. It sounds like they don't believe in their own project. There you go.
Well, that was my next question. What does it say when a company feels that buying its paper perhaps adds more value to its business than exploration?
Their project ain't worth a damn, or not worth as much as the market might think it is. And certainly, it's the management don't believe it. It's a big red flag.
Okay. Now, aside from NGEx, another company hauling in exploration funds by the fistful is Suriname gold explorer Founders Metal. It recently completed an upsized 20 million Canadian dollar bought deal financing, and then it got another 12.1 million at a premium from B2 Gold to give the major a 5% stake. Chris, is Guiana Shield the hottest exploration region in the world for gold right now?
Yeah, it seems to be. Despite the problems with Venezuela threatening people at the borders, threatening their neighbors' borders, yeah, it seems to be hot place. And I mean, that financing, I mean, it's sort of like those who have get more. It's the old adage that the market will give money to those who don't necessarily need it, and those who do, well, bad luck.
I think one of the interesting things about this, B2 is a, let's say, 1 million ounce a year gold producer. It's obviously putting a foot into the Guiana Shield. You've got Newmont there already. You've had Iron Gold there in the past. Barrick's been there in the past. But I think by and large, that region is notable for the absence of the bigger gold companies. Why do you think that is?
I don't know. I don't know what the working conditions are like there. It may be, there may be corruption issues. In many countries, mining companies will not call out corruption. I know this from Turkey, because they're afraid that they'll lose their projects if they say something negative about the corruption. And I've had personal experience of big corruption from the Turkish government towards miners. And there was like an omerta about this issue because the mining companies were all afraid that if they said something, then the process of losing their project would be accelerated. They all eventually lose their projects in Turkey. Face the fact. If the Turkish government could take a project away from Newmont, it can take one away from everyone else. And so, in some of these countries, you have to grease palms, and it just gets too difficult. With anti-bribery acts all around the world, the corrupt in these countries do not realize how many hoops and the executives have to jump through to feather the nest of these corrupt local officials. So I would not be surprised if it's some sort of issue like that, but who knows?
Now, Guyana's got one of the fastest growing GDPs in the world because of oil and gas discoveries offshore. It's got a very vibrant and growing oil and gas industry. I understand Suriname is starting to get that as well. Oil and gas are also sectors that have never far from courting the spectre of corruption. So could the situation there in the Guiana Shield get worse in this context?
As we've seen in Ecuador, yes. The oil is regarded as a resource curse. Mining is sometimes regarded as a resource curse, but oil and gas is almost always regarded as one. Because they become competing factors. It's almost easier for a government to just collect royalties off oil and gas because it's very hard to smuggle. Whereas gold can be smuggled and gems and things like that. The governments then eventually say, oh, well, the oil and gas sector is much easier for us. We just collect big checks. Whereas the mining sector's got full of all these whingers who keep complaining that, we've had a bad year, we haven't made any money, and, there's transfer pricing, Particularly we've got Chinese companies operating there. They're selling the product off for nothing back to the mothership, and you make no money anywhere. So eventually, governments who've got a choice between oil and gas or mining, it shouldn't be a choice. You should have both, because as I think Ecuador has discovered, you need the mining because the mining makes jobs. Oil and gas doesn't make much jobs anywhere and involves a lot of foreign workers, whereas mining, you can employ hundreds, if not thousands, of locals.
In a trip I had to Guiana a couple of years ago, the flight there from Miami was just full of US petroleum engineers.
Exactly. And it's all fly in, fly out, super big salaries, and the number of locals employed on rigs and things is minimal. There might be a truck driver, and that's it. Whereas at a mine, the construction, everything else involved is hundreds, if not thousands of people, particularly the trickle-down effect. And what is the trickle-down effect of a FIFO sort of like petroleum engineer flying in and then flying out? Nothing. And the trickle-down effect happens in Houston.
Okay. Well, a fascinating conversation as always, Chris. That's it for week, unfortunately. Thank you very much for joining me today.
Thanks.
Now, as I said at the top, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.